This afternoon is what they're calling Liberation Day, 1 o'clock Pacific, 4 o'clock Eastern. We will learn more and more about tariffs. We will get to that in a minute. I actually want to start this conversation with the Tesla Q1 delivery numbers. And folks, to say they were bad is an understatement. They were a complete and utter train wreck. The whisper number was between 360 and 370, which was already going to be a contraction. In reality, they came in at 336,000, a significant drop. I'm hearing a lot of Tesla bulls talking about 2025 being a write-off year. I hear more and more talk about optimists and, self-driving cars and, all of these other things. But at the end of the day, as of Q1, Tesla was a car company and the numbers are ugly. It'll be interesting to see how these delivery numbers translate to their financial statement. Are they able to make earnings, profits, all of those things? But again, there is no question that Elon Musk being part of the federal government has damaged his reputation, has damaged Tesla, and the delivery numbers show it. And if you actually break it down to delivery numbers in Europe and all of those other things, the numbers are pretty stark, are pretty freaking horrible. So let's talk about this afternoon, 1 o'clock. There's a lot of talks, lots of guessings. I actually heard Mohammed El-Arian talk about this, and I think he had the best summary to me. What we are about to go through is a path that could unfortunately go one of two ways. And frankly, we don't know. There is talk that this could be a rewiring of the country, or the economy, I should say, rewiring of the economy, much like President Ronald Reagan and Margaret Thatcher did, some 30 years ago. There is also unfortunate talk about this being Jimmy Carter on steroids. Those are some pretty stark options. Those are pretty divergent paths. One thing is certain, either Jimmy Carter, Ronald Reagan / Margaret Thatcher, we are going to have a period of adjustment. Some folks are calling it a detox. Some folks are calling it things worse like, chemotherapy, whatever you want to call it. It could get messy. Now, these are the things that I will be looking for myself personally. One, will we get a flat 20% tariff, some number, 20, 15, 25, whatever it is. I picked 20 because it's in the middle. Will we get a 20% tariff on all goods from all countries? In my opinion, for what it's worth, I think that's a disaster. I think that's Jimmy Carter on steroids, right? If we do some kind of flat tax on all things against all countries, no exceptions, that does not end well. That is, I almost couldn't imagine something more ugly. Or will we see follow through on talk we had, I think it was 2 weeks ago, about national security? I believe 2 weeks ago, and again, I could be wrong, President Trump and his administration talked about steel, aluminum, and pharmaceuticals. Now, if we were to get tariffs, even if they're big and nasty, like 50%, on select goods because we deem them as national security, I'm okay with that. I'm no national security expert, but hey, if we want to pick certain segments that we want to make sure we have in case of war or escalation, who might have guessed that steel, aluminum, and pharmaceuticals aren't the right answer? And then the party begins. What do other countries do? Do they do things like India? I believe India in the last 24 or 48 hours has agreed to drop some import duties and tariffs on U.S. goods, which is a net positive. Or do we start a legit trade war, a tit for tat, ever escalating, ever problematic trade war? I don't think it's unrealistic to say that today is a very important day for President Trump's term. This could be the start of something really good. It could also be a complete cluster, you know what, and he could lose the American populace. Both of those are possible. Even the most tried and true Trump supporters, I believe, if we come out with something that's 20% tariff on all things in all countries, will feel the pain quickly and become unhappy quickly. But at the end of the day, we're just going to have to wait and see. I will certainly be reporting on it tomorrow. At this point, it is what it is. Let me talk about yesterday, April 1st. April 1st, I did do a live stream. I had a speaking engagement in Las Vegas. So I went out to the San Jose airport early. I actually did a live stream at 6:30 a.m. 6:30 a.m. I did a live stream. The live stream went about 10 minutes. Unfortunately, when I got through security and I went back to the YouTube app to make sure the video posted, the video only posted the first 15 seconds. So instead of leaving you all confused about what happened, I deleted that video. And I actually still have my notes. I might find time today just to record them so we can keep the theme going. But unfortunately, I left my notes in my car because I thought I was done. And I didn't have them with me when I landed in Vegas. So I couldn't redo them. So I might do it later today, just do a quick live stream to run through April 1st, or I might just let it go and move on. Technology got me. So let's talk about what some Fed speak is. We got Fed President Williams saying the Fed will not allow high inflation to take root. This is one of the outcomes if we have a 20% tariff on all things in all countries. I have a hard time believing that we are going to have inflation be transitory. Fed President Barkin, the bond market is pricing in more recession risk. All right, so I'm seeing comments about the makeup video would be welcome. Okay, I will find time to do that. I listen to the audience. There you go. I will do that later today. Goldman Sachs is still calling for 3 rate cuts in 2025. I have a sneaky suspicion they will be reducing that. We did get 2 jobs numbers. We got the JOLTS report yesterday and the ADP report. JOLTS report, not great. Last month, we had 7.74 million job openings, now 7.57. Less than expected. Remember, we peaked at over 10 million. The ADP report, this was a good number. I don't know what else to tell you. The ADP report was a good number. The estimate was we would have 120,000 jobs created. Actual was 155,000. The February number, which was weak, was actually revised higher to 84. So revision up, not down. Wages went up 4.6% for folks staying in their job, up 6.5% for job changers. That's actually the smallest gap that's been recorded in the series. I got to tell you, folks, changing jobs for a 6.5% increase when you can stay put for 4.6, that's not a great trade. I'd want a double-digit increase. The good news about the ADP report is hospitality was not the largest growth. In fact, it was one of the weakest. It was only 17,000. Business services was 57,000. In manufacturing, Manufacturing, 21,000. Let's not forget that Friday's number is the most important number. It's the BLS report. Let's also not forget that the ADP report and the BLS report have not been in sync for months, if not quarters. So just because the ADP report was good, strong, does not mean the BLS report will be. So we will have to buckle up and watch. The expected number for Friday is 140,000 jobs created. That is down from 151,000 in February. We did get mortgage applications. Mortgage applications were down 1.6% in total. However, they rose for purchase apps. That was up 2%, up 9% year on year. Refi was down 6% week on week, but up 57% year on year. One more thing from the Fed. Fed Goolsbee has said a couple of things. Tariffs are a supply shock. I think that's interesting. I actually think tariffs are more of a demand shock, but I could see why you would call it a supply shock. Confidence nearly collapsing. Yes, that's one thing that I really sensed yesterday in my session. I was around 50 or 60 business owners, and it is very clear that a lot of them are sitting on their wallets waiting to see where they're going. And if I was in a room with 60 entrepreneurs and small business owners, and that was like 90% of the folks were kind of nervous, yeah, that's not good. And then lastly, soft info differs significantly from the hard data. Again, that is true. I would argue that the soft data is forward looking and the hard data is rear view looking. But that it is what it is. I do want to remind you and announce one new cool thing I am doing. One reminder, I am going live this Sunday at 8 a.m. Pacific inside school. If you've ever wanted to ask me questions about real estate, economy, whatever, I will be going live inside school. I just added it to the calendar, 8 a.m. Sunday, 8 a.m. Sunday. I look forward to seeing you there. We did this a couple of weeks ago, and I think 21 people showed up. I hope to see you there. I look forward to your questions. It's just a free fall. We'll go about any subject you want. And then second, something I'm going to do on April 27th, Sunday, April 27th. I'm going to go live with just the people who bought my course, How to Get Started One Rental at a Time. What I'm going to actually do, because I want to make this a quick start. I believe we are in the year of investors. This is the year to have a buy box, discipline, disrespectful offers, understand yield, all the stuff that I talk about in the course, How to Get Started One Rental at a Time. This is the time to do the work. 2025, we are going to have less homeowners. We're going to have more sellers. We're going to have more motivation. It is the time to sharpen your pencils. So I am going to give time once a month to people who bought my course, How to Get Started One Rental at a Time. Going forward, it will be everybody who buys it that month. This month, for the month of April, I'm actually going to go back and get everybody who bought the course January, February, and March. So if you bought the course in 2025, you can expect an email from me probably in the next 48 hours with a Zoom link to a session. It's scheduled for Sunday, April 27th at 8 a.m. My hope is you've gone through the course a little bit. My hope is we can break down vocabulary. We can set you on the right track. We can talk about spreadsheets, whatever you want to do to help you get started. So again, folks, I hope to see you inside school. If you do have the course, look for an email from me, as I want to make sure people who are getting started today get started on the right foot. Two more things to talk about before we wrap up. We did get U.S. manufacturing PMI, and unfortunately, it is signaling a contraction. We have broken below 50. Last month, we were at 50.3. Yesterday, it came out at 49. The last thing I will highlight, and this actually hurts to say, this hurts to admit, I actually agree with Jim Cramer. Don't hold that against me, but I think Jim Cramer said something I completely agree with. Jim Cramer said a 20% tariff on all things would be horrendous for the U.S. economy. I would actually highlight horrendous for the U.S. consumer as well. So, folks, that's what I got for the daily financial news, April 2nd. I apologize one more time for the cluster on April 1st. I will make up for it. I will leave. I'm not sure if I'll do it live or recording, but you can look forward to that because I have the notes right here. But yeah, have a great day. Like, subscribe, comment. We'll talk to you tomorrow. Bye.